So you want to learn how to trade options. First things first, we have Thinkorswim right here. We'll talk about some really good tips and tricks on how to do this. If the stock is going up, I'm going to be buying calls, and if it's going down, I'm going to be buying puts. Me personally, I don't do anything more than that. Let's assume that I have Apple, right? I'm going to enter in the ticker right up here into this little box, AAPL, and automatically I'm going to see the options chain and see all the different expiration dates. So basically what an options contract is, and this is super basic, but I'm going to give you a super quick rundown. It's a way to buy 100 shares of stock, or to have the right to buy 100 shares of stock, or to sell 100 shares of stock. So you can get a little bit more leverage. Here's the thing. You pay a premium for that, and the premium is the price of the option. For example, let's say I go ahead and I'm like, hey, I think Apple is going to go up today. Obviously, I'm going to question myself, okay, how much do I think it's going to go up? We'll say, I think, I've been watching Apple. I think it's going to go up $2 today. I can automatically see that the last price for Apple was $243.85. So if I'm doing this intraday, I always like to do not the 1 day expiration, and it's the evening here. I don't like to do the same day expiration. I just don't like doing that for me personally, even if I'm trading it intraday, because here's the thing. If they expire worthless, then going into the close, if I haven't come near my profit target, then they're going to expire worthless. And there's something called theta decay. Now, if I go ahead and look at the Greeks here, what I can do is click this button and I can see delta, gamma, theta, and vega. And delta is basically going to be for every $1 that the equity price moves up. So for example, $243, if it goes up to $244.85, then this is the amount of money that I will gain per contract. Now, 74 cents doesn't seem like a lot. However, you have to times that by 100. So that's actually $74. So for every dollar that Apple goes up, I will gain $74 in this particular options contract. However, theta is saying that at the end of the trading session, this is how much your contract is going to go down. So for me personally, I don't like dealing with theta. I'm going to do this options contract right here, because notice how the thetas are a lot lower, right? I think it's more advantageous than something like this when I have negative 0.82 theta, right? If I hold it for 1 day, literally 1 day, then my options contract is going to be worth way less. However, my delta is going to be a little bit smaller, but I would sacrifice a little bit of delta in order to be able to maybe hold on to it an extra day if needed. So that's something to keep in mind. Let's say we're doing intraday options. I would stay away from these. I think these are, a losing sums game. Now, if you disagree with me, then we agree to disagree. However, I like to play it safe and just go ahead. And if I'm making a day trade, I will do not the first, but the second most recent expiration date for my option. So like I said, I think it's going to go up $2. So I'm not going to go ahead and buy something where, I can see more strike prices. I don't want to buy a strike price of $257 when we're only at $243. That's way out of the money. I want to buy something close to the money. And yes, these are going to be a little bit more expensive. We can see that the bid and the ask is right around $380 to $250 per one contract. Yes, that's a little bit more expensive, but I would much rather pay that than buy these way out of the money options that are less likely to even come close to that and expire worthless. So something to keep in mind is you don't need to hold the option until the expiration. You can close these whenever you want. So when I want to go ahead and make the purchase for the option, if this is all you do, in all my experience trading options, I personally like to buy the most current strike price, the second expiration, right there. So I'll go ahead and click on it, and automatically your system will default to doing 10. Go ahead, press 1 if you only want to buy one. You'll see that, make sure you double check. Okay, January 10th, I'm looking at the calendar, that's 8 days from now, $245 call. This is going to be the limit price. If I want to get filled right there instantly, then what I can do is do two things. One is this is the natural price and this is the mid price. So what I can do is maybe adjust the slider to be more or less susceptible to triggering my order. Or if I want to get filled instantly, I can press market. However, be advised that the bid and the ask, there is a gap between that. So 48 and 37, that's 11 cents. Now, it doesn't seem like a lot, but that's $11, right? And when you're dealing with something that's $248, that's 5% of your P&L. So be careful doing market. I personally like to do limits. I want to try and get filled as close to the midpoint or even at the bid as possible. So in this case, I would probably do something around 246, maybe even 245 to see if some kind of algorithm will pick up my order. I'll go ahead and press confirm and send. Make sure, okay, this is the total price of the contract. Now keep in mind, this is the maximum amount that you can lose, $245. That's my risk. And I can go ahead and press send. So it didn't fill yet because the market is not open, but there's a few things that I can do here, right? So that's how I go ahead and buy a put. If I think it's going to go down, I'll do the exact opposite. I'll press buy for the put. It will default to selling it. Make sure you press buy, and you can go ahead and change that around, blah, blah, blah. It's the same exact thing, right? So if I want to cancel the order, I can click on this, right click, cancel order, or I can cancel and replace it. It's really that simple. So don't be intimidated by this platform at all. It's really not that hard to do once you understand what these different strike prices are and so on. So next we're going to look at a really cool statistic, and we can see today's option statistics, right? We can see the number of calls and puts being traded. So it looks like we have more calls being traded. Now keep in mind, this doesn't necessarily mean, oh, Apple is going to go up because we had more calls today, because people could have been selling calls, etc., right? But it's definitely something to be mindful of. And another thing we can do is look at the actual footprint and see who or what bought the most amount. Someone is betting that 1,276, $14 million position. It's pretty big. So maybe they know something that I don't. Maybe they think that Apple is going to go down. Maybe they're going to lose a ton of money. Who knows? It's probably an institution. It was on the CBOE. So something to keep in mind. Next, we're going to talk about swing trading options. So for this case, let's say I'm looking at something like Microsoft, right? And this is definitely going to be in making sure that you have the correct date chosen. That's the most important thing. When you're swing trading options, the most important thing is to have the correct date chosen, because you want to make sure that you give your equity enough room to breathe. So typically for me, if I'm swing trading something, I want to be looking at the charts, and I want to be making sure that I give it, let's say if it's a swing trade, I want to give it 2, 3, 4 weeks. I want to, and just a rule of thumb for me is I give it twice of that time in order for the expiration. So for example, if I think right now, and it's January 2nd, that this is going to be a good time to buy a call option on Microsoft, then I'll do somewhere around February. Maybe even, let's say I want to give it 2 weeks, I'll do February. But if I want to give it about a month, then I'll do sometime in March. We have March 21st, or we can even do April 17th. So I would probably do March. I think this is going to be the best. And I would buy something kind of near the money, around maybe the 450, 440 mark. Now, these are going to be expensive, right? It's going to be $1,000 for this contract. However, look at the theta. It's going to be moving a lot less, only 12 cents. So that's going to erode much less of the principal, and my delta is going to be 38. So I'm kind of just anticipating and hoping that the price of the equity is going to be moving in my favor and trending in that direction. So another thing that I can do is analyze the options trade and see at what price point and what date the option will be worth. So if I right click and press analyze, buy trade single, so that's analyze, after I right click, analyze, buy trade single, then it will take me right here, and that is going to default to 10, so keep that in mind. But if I have it at 1, everything looks good. Then let's say on the 16th, right, this is 2 weeks from today, if the price of Microsoft goes up $10, then I will make $212, so that would be around a 20% gain. Not too bad. However, let's say it stays at the same exact price, then I'm going to be down around $180 to $100 or $200. So that's something to keep in mind, right? If it stays at the same price, I'm going to lose money. It has to move up. Now, let's say I get super lucky and moves up $450. Let's say they had super good earnings. well, then my risk to reward ratio is pretty decent. I can win more than I risked just based on the options contract. So something to keep in mind. Is it likely that it's going to go up to $450? Probably not. It's more likely to stay within this range right here, at least until the 16th. So something that we can use, and once we put all of this together, so we know how to analyze the option and see how much, right? We can change the dates with this button right here. We can go in and change the dollar amount and start to analyze it. Something that is crucial is to have a really good strategy in place, because it's not enough to just think, oh, well, you know, I think Trump's in office right now, so I'm going to buy a call option. Like, it's not that simple. We need to know when to buy it. Now we know how to buy it, and we need to have a strategy. So what we're going to do is go over a real strategy for buying calls. So first things first, if you haven't seen any of my videos on how to use TradingView or trading in general, go ahead and make sure how to use TradingView. It's a very easy platform. It's much more simple than Thinkorswim. So what I like to do is we'll start with the swing trading strategy. So I'm always looking at the 4-hour time frame, and I want to see, and we can just go ahead and get rid of these. This is from a while ago. What I want to see is a strong uptrend. So we can see that I have a strong uptrend right here, right? We can see that we had this low, this one, and now it looks like something else is happening here. So another thing that I also really like looking at is I like looking at the 4-hour RSI. So once the 4-hour RSI has come below a certain level, right, typically that's going to be a time where I want to get in. So it hasn't gotten there yet. I want to wait and stay patient. But another RSI level I'll look at is a 4-hour and the daily. So the daily is probably going to look even better. We can see that the daily RSI, once it came down to here, we had this really quick pop to the upside, and right here as well. You know, we would have had to wait. So that's something to keep in mind, right, is that theta decay. You want to make sure you give it enough time in order to really bounce and pop like that. So we want to get in on some kind of a momentum play once it's already coming upward, or when we can see that it's very clearly starting to push on a higher high. That is just for an equity. So it's not too hard to, at least in my opinion, predict the price of equities in the medium term. However, in the short term, it's going to be a little bit more complicated. I mean, honestly, what you could do is wait for Apple to come down into these levels as an oversold, wait for it to start to, consolidate in here, find some footing. And once it breaks above that prior level, right, because we can see it retest, and then it keeps retesting. Once it breaks that and it finds some momentum, then you get in. I mean, it's pretty much that simple. However, if you want to do this intraday, right, I mean, we talked about, okay, this is how to make $300 per day, which I think you can do. I mean, if you're coming into this with $500, you're probably not going to make $300 a day, but if you're coming into this with $10,000, then I think it's definitely realistic to aim for that goal. I mean, if you don't hit $300 a day with $10,000, then maybe hit on average $100, $200 per day. So something that helps me is using my algorithm, which we can see right here. And how I use this algorithm is by looking to see where the price and where the signals are. So for example, we have some decent signals here. And basically what I'm looking for is I'm looking for instances of a buy signal and a sell signal. So this blue triangle is going to represent a buy signal. And then I have the take profit 1 and the take profit 2 in addition to my stop loss. So typically when I hang on to and watch these signals happen, I mean, something like this, definitely important to keep in mind that the trend is starting to switch. And also this buy signal is below the moving average. So it came up a lot less. Whereas something like this, when we're already above the moving average, we've been in a strong trend, is going to hit really nicely. So another thing, right? This sell signal was good. It wasn't too far above the moving average, but definitely something to keep in mind. So if you would have bought a put here, you would have made some money. A call here would have made a lot of money. That was an excellent signal. This one as well, probably would have made a little bit, but I don't really love how far above this is, right? When we have them closer to the moving average, those are the ones that are much more profitable in the long term. So I'm always going to be like I said, huge proponent of using my algorithm, right? Like literally this bottom right here, it was pinpointed. This one would have been the most profitable one by far. Even this sell algorithm or this sell signal as well. If you want to use this algorithm, go ahead and click the link in the bio. I will definitely be in touch with you in order to get it. It's private. I don't just give it out to anyone. You have to, be approved for it. So here's Apple as well, right? Just being able to get in, on these setups makes it a lot easier. The best for the US 30 NASDAQ. And that's when, in a whole another video, like I would rather trade futures for this, but still definitely super profitable, right? These signals are super fine-tuned for the US 30, and we can even see, right, this one I have set for the strategy tester. We put the strategy on, this was the profit. So 49% profit, 8% max drawdown, 83% profitable. Those are pretty good. And then on the NASDAQ, it's a little bit less, 62% win rate, but nevertheless, it's still very profitable and a pretty decent equity curve. So in my mind, or in my opinion, I think the US 30 is a little better, but not to say that there's not good opportunities on the NASDAQ. So another thing that I always look for, even without the algorithm, just in general, when I'm trading options, is a really strong trend. So for example, we have American Express right here, and look at how strong this trend has been. So if I can find oversold conditions within this trend, let's say I look at it on the 15-minute, because I'm always going to be looking at it on the 15-minute for my intraday entries. If I can find an instance where it was oversold, then those are going to be the times where I want to buy in. So let's see if the algorithm can potentially help us. Well, found this really good sell right here, and it found some oversold opportunities. So not too bad. Found this oversold opportunity for a good buy, this one for a good buy, these as well. So it definitely helps a lot with the screener if you don't know what you're looking at in terms of price action. However, if we're solely looking at instances where it was oversold, this was a good one, this was a good one, right, and so forth. Really what I'm looking to do is only trade in the direction of the trend. I only want to be taking calls during an uptrend and puts during a downtrend. So once again, I'm always looking at the 4-hour time frame and then doing a top-down analysis to where I'll look at the 4-hour, find the trend, and then look at the 15-minute in order to find oversold or overbought conditions, right? I'll use the RSI, I'll use mean reversion, looking at the moving averages, and I'll just look at price action, right? To where if I can see it pops down into the support zone, then that's going to be a time that I want to buy. So I hope this video, although it was pretty quick, I hope it helped you in your trading journey. If you want access to all of this, or if you want to work with me directly on how to learn how to trade, go ahead, click that link in the bio, get the algorithm, and we'll work together to help you get profitable. Thanks for watching.